Hey friends, I'm Melody Davis. Thanks for stopping by my channel. Welcome to Greensboro. Like, subscribe, contact me with questions. I'd love to chat with you. I'm actually here today with my buddy RJ Meyerhoffer, who's my preferred lender.
Hey, I'm excited to be here. Thanks for having me.
Absolutely.
I really appreciate it.
I have a lot of people that ask me about FHA, so let's talk about it. Give me kind of an overview summary for our people watching.
Okay, perfect. I actually am a big fan of the FHA mortgage. I try to, just really talk in terms that I think people will understand. And I think that, the big thing about FHA is I think it's a little looser, a little less restrictive than conventional financing. It's a little more forgiving, if you don't have, say, a really high credit score. Let's just say that your score is in the 600s. Let's say that your debt to income ratio is a little higher. That's really fits so much better into an FHA guideline than a conventional guideline. That program has been around since right after the Great Depression. It was designed to facilitate home ownership in this country. So it's a very flexible program overall. It's a go-to, like I said, for a lot of people who maybe don't have 700s to an 800 credit score, or for whatever reason, maybe the debt to income ratio is a little higher than what's allowed by conventional loan limits. So yeah, it's definitely a go-to. I would say, and it falls into what we call GOVI or government loans. So that's your FHA, VA, USDA. And I would say, for my business, I'm probably doing 60 to 70% conventional, but probably another 30 to 40% in government loans like FHA.
So FHA is interesting because people that, especially if they're younger, they don't have as much cash.
Correct.
They only require 3.5%?
That's right. It's 3.5% minimum down payment. Another great thing, and we're seeing a whole lot of changes with seller concessions.
Yes, we are.
Here lately.
Yes.
The seller can pay 6% of the purchase price and closing costs.
Which is huge.
Literally all of them, basically. So it is a minimum 3.5% down. That 3.5% down, does need to come from the buyer, but it's really flexible in that way. I mean, it could be the buyer's own funds and their checking, savings, maybe their 401k. They can get gift funds from relatives, mom, dad, brother, sister. The lender just has to be able to document where the money's coming from, ultimately. And if we can do that, then it's very flexible on where that required down payment's coming from.
Okay, we're gonna do a summary here, of course.
Okay.
So FHA, again, one of my favorites for especially first-time home buyers.
Yes.
Less restrictive. You can have lower credit, typically, than, can't have too low, of course, but you can have lower. They're government-backed loans, so again,
Yes.
that they're kind of helping offset the financing, the end of it. 3.5% down, which means, again, if you have a purchase price of $200,000, let's say you're buying a home that's $200,000, which is actually really hard to do anymore. That means you have to come up with?
Yeah, it's $7,000 on a $200,000 purchase, 3.5% down, $7,000.
So FHA, again, a great option. Now there is one caveat to FHA.
Okay.
That I don't love. Let's talk about PMI.
Sure. Regardless of the down payment, with conventional loans, when you're putting 20% down, you avoid PMI. And if you're not familiar with PMI or private mortgage insurance, it's just basically an insurance policy for the lender in case you default on the loan. I mean, that's ultimately what it is. It's not doing anything for you as a consumer, but it is part of your mortgage payment. So that does, unless you're putting 10% down on an FHA loan, then that PMI or the mortgage insurance premium will stay on there for the life of the loan.
I hate that for people. So again, it's called private mortgage insurance, PMI for short.
Yes.
Right?
Yes.
Okay.
So that, that will be there if you're, for the life of the loan, if you're not putting down the 10%. What some people will do, if they're starting out maybe with an FHA loan and they've built the equity, if the rates are, agreeable in the future, they may refinance it into a conventional to actually get rid of that PMI. So that's an option as well.
Thank you again, RJ. Again, this is RJ Meyerhoffer with Rate. He is my preferred lender here in Greensboro, North Carolina. We will put his contact information as well in this video, but if you enjoy my content, please like and subscribe. Contact me via phone, text, email, whatever you want to do. And we'll be bringing you more videos to help you either jump into your first home or hopefully jump into more homes with investment properties too. So have a good day.